Hello everyone, this is Matthew Frailey, founder of Breakpoint Trades. It is Thursday, July 10th. Last video I did for YouTube was on the weekend, so I'm going to provide you guys a quick intra-week market update. As you know, the market still remains very resilient. This is our backend recorder for our website subscription service, which I'm going to go get started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Thursday, July 10th newsletter. Tonight's newsletter, as you can see, divided into 8 major sections. Actually, 9. I am covering a few trade ideas at the end. But anyway, going to get through this newsletter fairly quickly. The market this week has chopped its way higher slightly. Market has been very resilient. But will that continue, or are we going to soon get a quick rug pull? We'll see. I do think we're close to some sort of pullback. Also, I'm getting some questions about that market exhaustion short that triggered last Thursday. That trade is still open. In fact, it's only price was initially, that trade was up pretty nicely coming in Monday, but as prices moved higher, it's actually back near the entry. So that, the system's still fine. Hasn't taken any drawdown yet, and I think ultimately that trade will be just fine. It has 100% winning trades, but let's go ahead and get started with things. So first off, just going to talk about the high performance KISS systems here, really the KISS systems in general. So here's a screenshot from the high performance KISS section. I mean, look at these gains, guys. Obviously, with the market doing very well, the KISS systems are long only, so they are absolutely killing it. So you can see these awesome gains here. And even just the standard KISS systems, the non-high performance, which are the standard daily systems that send out daily email notifications, they've done extremely well, as you know. So if you're not using the KISS high performance systems, definitely consider adding that subscription. It's well worth it. Nothing out there like it. And so again, congrats if you've been following these. They've been pretty awesome. And let's move on. All right, moving back to the general market newsletter. So item number 3 shows the index sector table, what transpired today and this week. Again, today market was slightly up, S&P up 0.3%, Dow up 0.4%, NASDAQ basically flat. For the week, some bifurcation here. The Dow's down 0.4%. While the NASDAQ 100 is down 0.16%, the S&P is up as well as the Russell. So some bifurcation here. So I know it's kind of funny. Some folks out there seem a little bit nervous on that SPY exhaustion short system that triggered last Thursday. But guys, I mean, look at what the market's done this week. It's done absolutely nothing. So again, there's a lot of individual stocks, a lot of high speculative stocks that have been going crazy. And that's what concerns us a little bit here going forward. It's when the market gets very, very frothy, you start seeing all these very speculative stocks going gangbusters. And that's what we're starting to see. It's getting too easy out there. You can just almost throw a dart at individual stocks and even just highly speculative stocks and make money. When it gets like that, sometime soon after you get a rug pull, because again, the market's not always going to make it that easy. Now, as far as the 21 market sectors we follow, these actually had a pretty decent day. A lot of these, you can see only 2 down sectors. So despite the major indexes, hardly up, some nice gains in the sectors here. Metals and mining up 5.3%. Transport's up 2.6%. Banks, financials bounced back a little bit. Brokers up. Energy's still up. So currency-wise, US dollar up 0.18%, up 0.6% for the week. Remember, it bounced off that long-term support area I talked about last week. And cryptocurrencies, Bitcoin up 2%, up 3.9% for the week. And it's up nicely after hours. Had a big pop after hours. So seeing some good action there. The crypto mining stocks have been great. Commodities, DBC, that's the index, down 0.3%, largely due to crude oil, which is a big heavy weighting, down 2.2%. Natural gas up 3.8% today. The copper up 1.46%. Uranium up 0.8%. The ags up slightly. Precious metals, gold up 0.2%. Silver up 2.3%. GDX, the miners, up 0.8%. The bond market, 10-year, 30-year, pretty mixed this week, pretty flat, honestly. Next, item number 4 shows the economic news calendar. Like I said, it's been a light news week. Tomorrow, Thursday, we have initial jobless claims and natural gas inventories. Okay, let's get started here.
Matt's macro vision.
So, hope you guys think it's a little bit funny. Remember, I came up with this new section for the website called Matt's Macro Vision. And honestly, I'm still not set on this name. One of the subscribers actually came up with that. There's various other names such as Matt's Macro Plays, Matt's Macro Moves, Matt's Long-Term Trend Plays, whatever. But these are areas where a few times a year, I see areas in the market that I think are poised for a major reversal. Could be individual stocks, sectors, commodities that I think are, having a major trend reversal. And those are setups that I think you could hold for months to possibly years at a time. So they're not like short-term swing trade ideas. They're long-term holds that you can buy and, accumulate and hopefully have long-term price appreciation. The issue we've had on the website is I've done very well coming up with these setups over the years, but they get lost. They get lost in the shuffle. If we have a newsletter with 50 or 70 charts, folks that may not look at the newsletters all that often or they skim through the newsletters, they might miss them. So it's better to have a dedicated section. So that's what this is dedicated for. Now, I'm not going to go over all the macro plays in this newsletter, but I'm going to give you an update. So REMX, that's one I've had recently here that I've been talking about. Matt's Macro Play. I put this out in mid-June. This is the Strategic Rare Earth Metals ETF. And as you know, that's been an issue politically. And, despite any deal they make with China, it's obviously imperative that we develop other sources, etc. We can't be just a slave to China for that. So anyway, I love the chart of this ETF. It came into long-term weekly demand. You had a wedge pattern, and you had a double MACD divergence. Well, remember, I've been talking about this for several weeks. If you bought an initial position, so far this week it's up 8.9%. So it's had a great week, breaking out of this wedge pattern on expanding volume. So that's a good start. Looking pretty good. Next, here's the daily chart of REMX, and you can see nice big gap up today. Again, hopefully you bought it prior to today. Like I said, I've been talking about it for the last 2 to 3 weeks, so you could have bought it within this range. But a nice follow through, nice big gap. And image number 8, here's LIT. This is the Global Lithium ETF. So I've been talking about this since basically early June. All right. And the previous week, it finally broke the downtrend line, and it's up again this week. So again, it has this long downtrend, and to me, it looks like it's starting, the beginnings of a major trend reversal. Next, image number 9, AZ Smart Cart. Had a nice day, up 7.25%. Finally breaking through a little resistance here at $11. So this is a play that I've been involved with, Steve and I actually, for years. And last year, we thought it was closer to being at a ready state. So last year in October, we held a webinar with the company. And, the stock was around $2.70 at that time. And so if you bought some and held it there, you're looking at a good 400% gain from that time. So, it had an initial big launch, and then you could see it kind of went sideways for many months earlier this year. Took out a big resistance here around the 850 range, which became support. Then it took out another resistance in June, chopped around, little ABC, had a little double top at 11, but it found support at the broken trend line, and then boom, it's trying to launch again. So this is another play. We feel it's disruptive technology, and they can go much higher in the long term. But again, this is one we covered way back in October of last year, and it's had a hell of a appreciation since that time. Chart number 10, here's the weekly chart. So again, where we held the webinar was right here on So just in the mid twos. So anyway, broke out of this range here back in May, pushing higher. Now the next supply zone is kind of in a big range, but I'm hoping we can get them to move up into this supply zone, hopefully fairly soon. That would be a nice move. And then longer term, I'm looking for eventual new highs. You could see this sucker was up, in the upper 20s and I think $30 at one point. So like this one long term. Next, image number 11. So here is the ACWI. That's the World Market ETF, one of them anyway. These are the other things that I've been covering since earlier in the year. I think that the world markets are eventually posed to outperform the US markets. So I've been showing charts of EEM and EFA, but here I just have ACWI, and I'm showing the ratio here. So this is the ratio of ACWI to SPY. Again, clearly you can see on the ratio, SPY has outperformed this world market ETF, for the last 16, 17 years. But you can see how this ratio is starting to, the slope, it's starting to flatten out. You have a divergence here. You're moving average ribbon. It's starting to pinch up a little bit now. And you have a horizontal level at 50 on the RSI. So this is one to watch. Eventually, I think this is going to start leading to the upside. And when it does, it could perhaps lead for years. So again, I could also show a ratio chart of EEM or EFA, but they're all going to move similar. Again, I got a bunch of other long-term Matt's macro vision plays, gold, platinum, silver, stuff like that. But, anyway, pretty excited about this section, and hopefully a lot of you are as well. Here's platinum. As you know, platinum was something I was discussing most of the year. Started discussing it early in the year, heavily discussed it in April as a major trend change coming. It was very bullish on it, and this obviously played out extremely well out of this big coil. Now, you've had an awesome trade if you bought it within the coil back in April and May when I heavily talked about it. It's all right now, it's in kind of a supply, so it may need to chop around or consolidate. Honestly, the best thing for it to do would be if it had some sort of nice ABC pullback. But again, don't get me wrong, guys. This trend isn't done. So if this has a good ABC consolidation, I would be a major buyer once again. I still own my physical platinum, but I took a lot of profits on my electronic ETF. Another one is image number 13, palladium. Now this one hasn't broken out yet, but I love these weekly bases, as you know. So this has been developing, been pushing higher within the pattern. If you bought it over the last couple months when I've been talking about it, you're higher because it's worked higher within the base. But this is definitely one that looks pretty good, like it's setting up. You can see how the ribbon is curled up and it's actually starting to expand up a little bit. All right, so that does it for Match Macro Vision. Let's move back to the general market newsletter. So image number 14. So here's the SPY and the S&P 500 index KISS systems. I'm showing both the SPY and S&P. The S&P, it's an index, you can't trade it, so that's why I like to show SPY. You can actually trade it, but these are our KISS systems. They're still long. SPY has a tight trailing stop at 61.34. You can see that nice entry back in April. And you could actually see how it also was able to capture 3 mean reversion trades inside this. So again, this is this experimental combination of the mean reversion with the KISS trend following, where you get these nice little trades inside the main KISS trends. So you can see on SPY here, it had 2 of them. And the current stop is 593. Next, image number 15. Here's the 4 time frames with these custom indicators. Again, we're above the ATR on all these time frames, even on the 78-minute. One thing I noticed on the 78-minute, we had a little support cycle and end of bull cycle. So again, we'll see how things look tomorrow on Friday. Next, back to the standard charts. Chart number 16. Here's the daily S&P. So again, we're still in this wave 5. You can see today made a slight new high. There is a little RSI divergence finally setting up. Again, when we do get a pullback here, First support is at 9 EMA. Then the previous all-time highs, the February highs at 61.50 would be a big support. Then the 20-day moving average. Then there's an open gap. There's demand zone. Yada yada. Okay. When we do get a pullback, I'm not looking for a major top, guys. I'm just looking for a pullback in the uptrend. Okay. Next, chart number 17. Here's the zoomed in daily showing this parallel channel lines. So same deal. We back tested the middle channel line last week. Pulled back a little bit for a couple days and pushing up again a little bit. Again, you can see your big supports, horizontal line here, and even the uptrend channel line. Next, chart number 18, here's the 60-minute view. Again, slight new high today, 62.90 on the S&P. If we pulled right back from here, you can almost call that a double top, but there is a little now MACD divergence here to be aware of, and so far we only have 3 waves up. Next, chart number 19, here's the triple Qs daily chart. Again, no changes here. Smart trailing stop, 536.24. Again, system had an awesome entry back in April off that big April 7th rally. You can see how it progressively set an initial stop, progressively raised it up all this way. Beautiful example of the KISS system. Getting you in, keeping you protected, raising that protection along the way up. Next, chart number 20, here's the standard daily triple Qs. So again, a little bit of just slight little pullback today. Again, we're still above the 9 EMA. We have a little RSI divergence here. Again, your supports, big support level down here should we get a pullback sometime soon. Next, chart number 21, here's the weekly chart. Like I said, guys, those of you ultra bears, you're always looking for a top. Look, guys, until the market actually breaks structure, you should not be looking for any shorts. The only shorts you should even look at are hedges. So here on the weekly, this boxed area, that's your next big demand zone. You would have to loop, the Qs would have to break this demand zone before you even consider then looking for shorts on a bounce. Next, chart number 22, here's a 60-minute view. So here I drew kind of a coiling action. We'll see which way this breaks. Do we get one more pop again or not? We'll see. Chart number 23, here's a 60-minute view. You could also draw it as a little symmetrical triangle here, short term. This is likely to resolve on Friday. Moving on, some of these major stocks, chart number 24, NVIDIA, continues to work higher in this wave 5. KISS system, of course, has been long this almost the entire time. It has absolutely nailed this trend. Next, chart number 25, Microsoft continues to just drift higher, just riding that 9 EMA all the way up. Obviously, the KISS system has been long this almost the entire time. Chart number 26, Tesla, once again, continues to bounce off of this kind of demand support zone. Again, you got some major moving averages above here, 200-day, 50-day, etc. Elon definitely creates a lot of drama. Honestly, I'm surprised how well the stock holds up given all that, but hey, it is what it is. Next, chart number 27, here's small caps. They continue to push higher. They're now into this nice supply zone. And again, this is a zone. It raises all the way up to here. There is a little 5 RSI divergence here short term, but otherwise, small caps have been outperforming here short term, playing some catch up to the general market. Remember, look how far the small caps are from their all-time highs. Their all-time highs were back in November, whereas the NASDAQ and S&P and all that, they're at new highs. They've been there for quite a while now. But a little bit of RSI divergence at the moment. All right, that does it for the indexes. Let's move on. Chart number 28, here's the VIX. VIX slightly down today. Really nothing to say here. Bollinger Bands now are starting to expand a bit. I will say it's going to be difficult for the VIX to get below its lower Bollinger Bands right here, just because the lower bands are starting to slope down a bit. It's almost like we need a pullback in the market that would cause the lower Bollinger Bands to curl up a bit. Allow that to happen in the future. Next. Now, one chart to follow, guys, start monitoring short term is this VVIX to VIX ratio. This thing can give you pretty phenomenal buy and sell signals when it spikes outside the upper or lower Bollinger Bands. Take a look at this. I mean, sometimes it's early by a day or two, but man, it's been pretty good. Okay. Now, some of these recent sell signals like the one here in June. It just produced like a more of a sideways pullback, but you still got a little bit. Anyway, it's near the upper Bollinger Bands. It's not outside of it, but it is close here. So we want to start monitoring again. All right, moving on. Driver 30, here's TNX. That's the 10-year Treasury yield. Remember, it did pop out of the wedge, but so far it's pulling back. Now we'll see if the broken downtrend line of the wedge or these moving averages hold it as support and tries to bounce. Next, Driver 31, HYG, high yield corporate. Remember, this tends to be a leading indicator for the S&P. S&P tends to follow this, and it was a leading indicator all the way up off those April lows. It made new highs first before the S&P. It made new highs in May. Anyway, it's pulled back. It's bounced a little bit here. Almost has a little bear flag look, like it could come down again. So we want to keep an eye on that because, again, the S&P tends to follow that. As far as market sectors, I'm just going to cover the standard ones here. Here's XOK Technology, down a little bit today with the NASDAQ, but again, hasn't broken any supports. Driver 33, XOC Communication Sector, contains a lot of those big cap tech stocks like Amazon, stuff like that. It's pulled back here the last couple weeks. Otherwise, this area, which was previous resistance around the 105, is now big support. Next, Driver 34, semiconductors. Again, they just continue to melt higher. Remember, NVIDIA is a big component of that. Driver 35, XLF Financials. Financials and banks all had a nice power up move out of their coils. Pulled back, but kind of flagging at the moment off their 9 EMA. Driver 36, here's banks on the same pattern, basically. Next, Driver 37, XLE Energy. This continues to hold up well. It's kind of been in this been holding this uptrend line. We still got a big open gap above here. Moving on to commodities, Driver 38, DBC, down 0.3% this week. Like I said, longer term, we're just stuck in this big, nearly 3-year channel. Eventually, one day, DBC will break out of this channel and have a big trending move. But for now, it's still stuck within this range. The longer something stays in a range, consolidation, the bigger the trend move will be when it finally does break out. So I actually like the fact that it continues to stay in here. That means the pop's going to be much stronger when it finally does break out of this range. Next, Driver 39, here's crude oil. Pulling back here a bit. Again, this is a big component of DBC. You can see your big support is below where it bounced off last time. Driver 40, copper, continues to be up once again. Remember, Trump with the tariff on this had that huge pop the other day, up 9% essentially. So still way up here. Driver 41, DBA agriculture, still weak here. Lost the 200-day moving average a couple weeks ago. Not for now, finding resistance at the 90 EMA. And it's got declining 20-day, 50-day. So this needs some work. Next, move into crypto. Driver 42, Bitcoin. Like I said, Bitcoin is up this week, and it actually is up nicely after hours, after the cash market closed. You can see big pop here, up a couple thousand points after hours. Again, Bitcoin, remember, I think we've called this great. We called this rounded top back here late last year, which played out. We talked about this thin zone, which it filled. We talked about a big demand zone in here, which it held. Then it broke the downtrend line, started an uptrend. Then we called for this ABC pullback into the demand zone. So, I mean, we've called this perfectly. Anyway, big breakout here. Now you got a big demand zone here between 107.50 and 110 range. Next, Driver 43, here's IBIT, one of the ETFs. You can see popping nicely here. It actually broke the trend line yesterday. Nice follow through today, and of course it's up after hours. Driver 44, Ethereum, also popping nicely as you'd expect. Driver 45, Ethereum ETF. This is the 2x leveraged ETF, so this is popping nicely. Driver 46, the miners are doing well. WGMI, these have had big power moves. This one especially since the April wedge break. And this is up, all these are up after hours, guys, with the move in crypto. Here's Wolf. The Wolf was a recent one that broke out, back tested. That was a great low risk entry. Volume patterns are great here. This is also up after hours. Moving on to the US dollar, chart for 48, UUP up today. But again, remember, been showing this big support zone. So it has bounced off of here. Again, it still needs work to do to call a major bottoms in place, but we do have some nice MACD divergence now. We've bounced out of the support range. Really, honestly, it needs to clear this 50-day to really call a decent bottom. Chart 49, here's the daily dollar index itself. Again, you have the same thing, this MACD divergence. Again, it's still in this channel, so you'd really need to see it break out of the channel. Hasn't done so yet. It simply bounced off the bottom of the channel. But we do have some good divergence in place. Chart 50, here's the weekly view of the dollar. Of course, it's been in this demand zone, so it is in an area where it could technically bounce. The dollar's had, I think, one of the worst starts this year that it has in many, many, many years. So big sell-off in the dollar from that supply zone way back here. But we are in a demand zone. Next, chart 51, gold. It's up slightly today. Again, it's still stuck in this. Again, the bullish view would be this is a symmetrical triangle, but we'll see which way this goes. Next, chart 52, silver. Nice rally today. Good volume here. Take a look at that. You've had the 9 and 20 MA squeeze, and this is starting to play out. Remember, silver is also one of my long-term MATS macro moves plays. I think this eventually goes to $50 and beyond. Next, chart 53, here's platinum. Remember, I showed the weekly, monthly chart above. Again, it's still kind of stuck in its range. It's still held up. It's been very resilient here. But again, the question is, can we get a new pop to a new high again, or does this need to consolidate? It certainly had a hell of a move, 35% move out of that big base. Next, chart 54, GDX. Bounced today, but so far it's trying to hold this 50-day moving average. Again, we'll see which way this goes. And as far as trade ideas, guys, it isn't anything new. I'm just going to cover some recent ones. Again, the market has been so frothy, pretty much anything's been working. A lot of speculative stuff, but CBRL, Cracker Barrel, this has worked out. It's been kind of slow, but again, I've suggested moving a swing stop up to that higher low there. Next, chart 56, KSCP was one I showed on Monday, breaking this base. Pulled back a little bit. I said it looked fine still. Looked to buy it, and it's bounced right off that base on expanding volume. This still looks pretty good, guys. This could still push up higher quite a bit. It's coming out of a base on expanding volume. Chart 57, NBIX. We've kept it on a list here for the last couple weeks. Finally broke out this week. Finally seeing a little action. Volume's just so-so here, so just be aware of that. Take some profits. Chart 58, ASM. Another one I had on Monday. Finally broke out yesterday. Following through today. Chart 59, Hive. This is one that broke out. I said to watch for a low-risk entry on a back test of the trend line. Remember, that's always your low-risk entry, and that's what we got. Trying to bounce here. Again, should this push again, I think you can move your stops up. And chart 60, MLM, Martin Marietta. I mean, this has been slow, steady. But after it broke this pattern, it's been pushing up. Again, whether you're in this or not, it is it's an expensive one. But have a stop in place. I'd probably put the stop at Tuesday's lows there now. All right, guys, we'll see what happens. As far as futures, ES futures are up about 5 points this evening. Again, we'll see what happens tomorrow. And enjoy your Friday and the weekend. Take care. Have a good night.